Hi friends, I'm back with one more video. So today we will be discussing the intraday rule based straddle management. So today we will be discussing in the form of shifting the straddle. Yesterday I've made one more video, so wherein we've discussed the one of the straddle management for the intraday. Let me show you. You can just visit my YouTube channel. You can just one second. You can just go to my home page. Right, when the market go to videos, right, this is the video what I've made yesterday, intraday straddle management number 1. So today we are going to discuss about the straddle management 2. And just in case if someone is not aware of what is straddle, see, go to my search, right, go to the YouTube channel, search for hybrid trader, go to search, and you can just search for a straddle. Okay, one second. If you search for straddle, see, there is a series. You can just go to the straddle series, so wherein I've discussed about the complete basics about the straddle. What is straddle? Straddle can be, see, let me show you, this is very important.
Hi friends,
Okay, see, this is what I've shown you. So what is straddle, right? Everyone says that straddle is all about at the money. No, straddle can be view based. It can be ATM straddle, it can be OTM straddle, it can be ITM straddle. Completely it's your view based straddle. So I've told you like what all adjustments we can do. So this is basically for the positional, but the same thing we can just get that done in the intraday also. Okay, so we have discussed about strangle, right? This video I've made like maybe like 1 month back. So yesterday this was more in line to the positional. So we have discussed about the strangle management yesterday, how we can shift the straddle to strangle and then back strangle to straddle. We have discussed about what is the capital, the margin, right? This particular straddle is like bread and butter for all the big players. What is the VIX, right? End of the day, whenever you deploy any trade, right, that should be mapped with your VIX or your view or the open interest, and we discussed about the edging. So I would recommend you to watch this video, followed by you can watch yesterday's video, the one which I have made, okay, which one is it? Yeah, intraday straddle, and then you can watch this video. And before that, friends, go to the community tab, because Saturday see, if you go to the community tab, we are planning to have a webinar or sort of introduction. I mean, let's start with the first session. We'll see like where it takes us, but we are planning to start at 7 p.m. So I would recommend you to please go and take up this poll, right, whether you want it on 23rd or you want it on 24th. Okay, so let's jump back to the strategy, which is rule based intraday straddle. You call it adjustment or you call it management. Okay, let me take you to sensible. Okay, so I'm just demonstrating it on the 28th July. What I'll do, I'll just select this straddle here. That's it. So what did I say? Straddle can be at the money because your price is at 36,500. So we took the at the money. It can be in the money or it can be out of the money, but for the demonstration we are taking at the money. So the adjustments, what you have to do is like, friend, again I'll take the calculator. This is similar to what we have done yesterday, but all of us see what is the total premium you got. 360 plus the consolidated premium. One second, friend. We got a premium of almost like 700. Okay, so this is the intraday. So you got the consolidated premium of 700 rupees by your straddle. This is not the positional. So what you have to do is like, if it is like positional, we could have done the adjustment only when the current market price reaches your break even, or maybe mid of your break even and the current market price. But this is intraday, just to balance, just to do the delta balancing. What we do is, I'll just divide it by 4. That's it, right? So now 170 is the benchmark for us. So whenever market makes a move of 170 here upside or 170 downside, so then your adjustment start. So what is that adjustment? I'll show you. Now let's say your market stands here. I'll say this 173 plus this one equal to 36,676. So let's say if the market goes upside, I'm just trying to manipulate, friend, right? Market goes, so 0.5%. The moment market goes upside by 170 points, see, dividing it by 4 or 5. So you are, see that I'll just leave it on your risk appetite. You can divide it by 5 also. So now you see a loss of 466 because I'm just doing with a quick momentum. You might end up seeing that 460. This is projected. So ideally this can be 0, this can be 200 loss, or this can be like whenever the market is slow. See, I'm just simulating it. I've just moved it 0.5% with a quick momentum. Okay, let me get it back to I'll just reset. Right, your loss was only 20,000, but what I'm doing is I'm just moving the market to 0.4% with single candle within a fraction of second. So that's the reason you see 428, but ideally will not see 428. Right, it will be like 0, or at times if the market is slowly moving. Let's say you deployed this trade at 9:30. Right, until 11 o'clock the market slowly moves. So you will rather see the profit here. So do not blindly believe this projected score. This can be plus, this can be minus, but you have to put your own thought process. You know, right, this loss, how much time it took from your current market, from the center of the market to make a move of 170 points, right? Was that 5 minutes, was that 1 hour, 2 hours? So all the profit and everything depends on your moment. Okay, the moment the market made a move, up move of like almost like 170 points, right? This one, what did we do? Again, I'll tell you, friends. So maybe just for this, right, this place, combined premium divided, this is your what did I say? I divided it by 4. So you do it by 3 or you do it by 5, right? The moment I said 4, so this is 173. Okay, so we have simulated the market. Now what you have to do is like simple, friend. You have to just convert it to, see, what you have to do is like you have to just exit these 2 legs. That's it. You have to exit these 2 legs and shift your straddle. See, when I say shift your straddle, that might sound like what is the shifting all about? As good as exiting your entire straddle and deploying a new straddle at the current market price. So your current market price is here. What you have to do, you have to just make one more straddle. That's it. So your market will be in the center of the straddle. So you have a new straddle. That's it, friend. This is all about the adjustment. Looks very simple, but it works like miracle. What are we doing? We started with a straddle. The market was standing here, right? You know, right? The beauty of straddle is market should be within this green zone. But the moment the market came like 170 points, so your market stands here. Now there comes the delta. The delta of this, so let me show you, right? Let me show you rather than me telling the practical. Now I'll do one thing. I'll reset this. I'll take it to the Greeks. Check the delta. There is not much difference, like 12 and 13. So delta is -1 because the premiums differ, because this is 360 and this is, what is a 335. So if I make this 360, will that change? Let's see. It's not changing. Okay, so let me go and deploy. So now end of the day it's delta. So now what we did, we increased, we made the market go up, right? Sorry, what was that? Again 173 plus 173 plus this one is equal to, so sorry, 173 plus the current market price, right? So I'm just moving the market to this place. Okay, now see, your market stands now. Initially it was in the center. Now so let's go and check the Greeks. So now do you see, you put as the delta of 10, okay, but your call as the delta of 15. See, friends, try to understand, doesn't matter which YouTuber you are following. See, end of the day they tell you strategy A, strategy B, strategy C, strategy Z. I mean, but the core purpose of doing all the adjustment is you have to balance the delta, because your put side delta is 10 but your call side delta is 15. So let's say when the market moves, so this is your straddle, right? You started with a straddle like this, the market went the very next 1 hour, it went here. Now your market stands here, your straddle has become imbalanced, point number 1. But now, though you're not seeing much loss, maybe your loss would be like 200 plus or minus. It can be plus or minus because how much time it took to travel that 170 points, right? It can be minus or it can be plus. But now the question is, still you're not in bigger MTM loss because the delta was able to manage, because these two premiums delta was able to match with each other. But now when we started, the delta was -1, or it will be like -0, right? It will be like 0 or -1 or +1. This is fine, right? This is the way we started. But now you should see there is -4, meaning put side delta is 10, call side delta is 15. So let's say the market makes another move of another 100 points, friends, 100 points, right? The way the premium of your call sell will increase more because the delta is more. What is delta actually? Whenever the underlying asset, now the underlying asset is Bank Nifty, when the Bank Nifty moves by 100 points, right, this premium will increase based on the delta. Delta is I, so this will increase double. But do you think the decay will happen? Because see, you're getting that the delta is less actually, so the decay will be like very less, but this premium will increase like anything, right? Though you get profit here, maybe you'll get like profit here, definitely you'll get profit here, but this will be in loss minus net. If you take, you will get into more loss if you're not balancing the delta. Until this point you're okay, you got -200 or +200, but if the market makes another 100 points, so then this will show you like -800, -1000, -2000, because there is a difference in the delta. So we should manage the delta. Even the strategy what I'm telling is like, it's as good as managing the delta, friends, as good as managing. Maybe there would be like hundreds of strategies, right? But end of what I'm telling you, just exit this leg, make this delta back to 0. How can you make the delta back to 0? By just deploying a new straddle. Accept this 200 profit or loss, and then you go for a new straddle. So basically what you will be doing by doing with the new straddle, you will be able to make your delta balanced. Okay, let me show you. This is self-explanatory, but still I'm telling you, for people who are not able to understand, what you have to do is like exit this 2, okay, go to sorry, whatever is the market stands at let's say 37,000. Go to add this thing, go for 37,000, deploy a new straddle. That's it. What did I say? Exit this 2 straddle. You are back with your new straddle where you're, see, check the Greeks now. Your Greeks, see, this is what I've been talking, zero delta management. So you are safe. You are safe for another 170 or 180 points on the downside. You are safe for another 170, 180 points on the upside. So what did we do? We have squared off this 2 and we deployed a new straddle. This looks very balanced, right? Initially it was like the market was standing somewhere here. It is imbalanced. If it makes a 100 points move, you will get into huge MTM losses. So what did we do? We balanced the delta by exiting this original straddle and deploying a new straddle. But again, people will ask me, what if my loss is, see, it all depends the time it took to make a move of 170 points, the time it took to make a move of 170 points. If it took 3 hours, definitely you will be in profit. If it took 4 hours, definitely you will be in double profit, right? If it took only 5 minutes, definitely you will be in loss. But that is very rare. In 5 minutes 180 points, that is very rare, right? Now what will happen, let's say now the market stands here. What I'll do, I'll just show you one more example. This is all about the thing. So now the market stands here, alright. I'll say -170. Now let's say the Bank Nifty went minus, because 170 was the benchmark. We have divided by 4, 36,520. Okay, so what I'll do, I'll go here, I'll take the market down, right? 36,250. see, now your market stands here, right? Delta imbalanced. Now if you go and check your delta Greeks, see, the delta is imbalanced. Again it came to 4, right? It should be 0 actually. Now what you have to do, simple, friends, you got the point, right? You have to just exit this. You have to just exit this, and wherever the market stands, you have to go for a new straddle. Okay, what I'll do, I'll just deselect. And where does your market stand now? Sorry, where is your market stands? Market is standing at 36,500. I'll deselect this 2, I'll exit this 2, I'll go for 36,500, straddle, use straddle. That's it. Your market is again in the center of the straddle, right? and this is your new straddle. So wherein again you got your delta back to almost like neutral. See, it's not always like getting the delta to zero, because check the premium, right? Premium of call side or put side will never be balanced because of the volatility moves, because of the VIX. This is all about the adjustment. So you have to, what do you have to do? First take the consolidated premium, divide it by 4, write somewhere in the notepad. Whenever add the alerts when the market makes a up move of that alert, blindly go and exit this trade and deploy a new straddle. That's it. Again, if it makes 100 points or 170 points, that's it. Exit the trade and deploy a new straddle. So do not do more than 3 straddles. I would say majority of the time 1 to 2 adjustments are sufficient on intraday purpose. If the market remains sideways, you are not even required to do any adjustment. You got my point? Go and watch my series. Right? How many times the market will give you quick momentum like this? Right? Majority of the time market will be sideways. Right? Slowly it will have zigzag like this moment. Right? Very rarely we see this type of movement. Even in this type, that's what we are targeting for, this type of movement also. That's what the market make. If 170 points, we are deploying a straddle here. Market is again in the center. Right? When the market makes again a 170 points, we are deploying a straddle here, ensuring that market is in the middle. Same 170 or 150 points, we are deploying a straddle here, and we are getting the market in the center of our straddle. This is the adjustments what you have to do, friends. See, I've been like very patient in terms of, because I'm revising, and there is general complaint from many of the experienced traders saying I'm doing the repetition, but this repetition is only for the new traders, because you know, right, trading itself is a very complicated. So now I'll take you back to the other presentation. This is important. This is more important, because I know again people will start asking me, what is this stop loss? See, friends, if you are not able to decide your stop loss, and stop trading. Honestly, I'm telling, why do you ask that question, friend? What is the stop? See, stop loss is very generic. It's not specific. Stop loss depends on your trading style, on your risk appetite, right? The kind of risk you're able to take. I cannot say that. Ideally, I can say 20 points is a stop loss. I can say 10 points could be the stop loss. For a few it is like 50 points could be the stop loss. Right? Based on your capital, based on your risk appetite. Okay, now the important factor, whenever you go for straddle, you have to have the view of the VIX. That is one of the bare minimum. Go and watch my video on VIX based strategy. That is one of the Bible for all the option sellers. People who might have seen that video, they might know the crux of the VIX. VIX, basically all the option sellers are called volatility traders. My plan is to become a volatility trader. That's it, friend. Right? Because the more the VIX, the more the range you will get. The more the VIX, the more the POP will get in your trade. The more the VIX, the max profit will be more. But there is a catch. Every retailer, every YouTuber say that VIX should be high, VIX should be high, VIX should be high when we go for credit strategies. Absolutely, VIX should be high. But when you deploy the trade, VIX should start coming down. This no one talks. Yes, VIX should be high to get high range, to get high POP, to get maximum profit. Maximum profit in the sense like more maximum profit. But the moment you deploy the straddle, your VIX should start falling. No one talks about this thing. If the VIX goes up, what will happen to your premium? Your premium will start shooting up. But what do we need? We need the premium to decay. As an option seller, we want premium to decay, but not the premium to go up. So increasing VIX will increase your premium. Try to understand that's one of the common sense, friend. So no YouTuber will say that. So I'm not trying to compete, but that's what I've learned from my guru. Like couple of gurus, I mean, I can take their names, but I'm not sure. When I do the introduction video, they said that whenever you deploy any credit strategies, yes, VIX should be high, but VIX should start falling from them. At least forget about falling, but VIX should be static, or VIX should be sideways the moment we deployed the straddle or iron fly or strangle. At least our premium, the sell side premium should not increase. If it starts increasing, you will end up into MTM losses. Okay, now you should know when your loss starts. If someone asked me when to do the adjustments, if you do not know when your loss starts and you are messing up your trade, you're not meant to do the trading, friend. You should know when your loss starts. No one can do all the algorithms, calculations, everything, right? Few of the tools are providing you the magical tool called blue line. I don't know why people will ignore this blue line. Blue line, even we call it as T plus 0 line, which gives you an advanced indication saying that, boss, your loss will start from here, at least a projected loss. I'll show you. When I say, I mean it, friend. Honestly, when I say, I mean it, right? Let me get it back to 0. Sorry, let me get it back to reset. So let's say this is your original iron fly, sorry, your straddle. Okay, let me zoom it out so that you'll have more clarity. Now, where does my loss start? See, I can easily say my loss will start somewhere here, maybe this side. Sorry, I'll take the black line, this move, or maybe somewhere this move, ideally, because my blue line is breaking this 0 line at this point. So now let me go and put the cursor, right? See, my loss will start. See, that's what, see, same I'm putting. Until here it is profit, like 84 rupees profit, but loss will start from this point. And even see, my loss will start from this point. Right? Blue line gives you that indication, but do not ask me like when should I do the adjustment. Before your loss starts, like 10-20 points before you do the adjustment, because you are doing the intraday. The beauty of intraday is you do not have that overnight threat of gap ups or gap down. So any loss you're making, that is pure what do you say, the mistake of you actually, because overnight gap up, gap down, anyways you do not have the control. I'm a positional trader, but intraday, rather than seeing the 78 rupees, if you end up getting like 1000 loss, right, that is purely your mistake, because blue line is giving you an indication, but you have not obeyed or took the consideration of the blue line. That's what I'm telling. The beauty of intraday and the positional is only one thing. In positional, your loss is not, see, controlling the loss is not in your loss, because we have the threat of gap up and gap down. You do not have the control, at least in the intraday. I'll make a video on intraday versus positional. Intraday, you know your loss actually. Whenever you trade, you pretty well know that, boss, my loss could be like 200 to 300 rupees for the next 1 hour, right? Rather than the moment you deploy the trade, I would rather say first deploy your stop loss. First deploy your stop loss in your broker terminal on the upside and on the downside, and then you deploy your trade. Then you go for the straddle. That's it. You should have your stop loss here. You should have the stop loss here. First deploy the stop loss. And then deploy your trade, because we never know, right? Because we are doing intraday. A quick momentum will take you to the downside. You will get into loss to, or a quick upside momentum. That's why deploy the stop loss, right, in the broker terminal, and then go for your trade. Right? We are talking very basics, right? I'm not sure whether I have to talk, because my audience are also like new traders, so good to talk about the basis. Yeah, next thing, yeah, let's jump onto this thing. So what did we discuss? Your what do we say? Where does your loss start? So this will be given by your blue line, or you go and put the alerts. That's it. If this is 170 points here, 170 points here, go and put the alerts in trading view. Even I've discussed in yesterday's video, also I'll not repeat. Now coming back to this slide, right? We discussed about stop loss. We discussed about when to do this, and current, see, CMP. Whenever, as long as you are making the current market price within your green zone, this area, based on your risk capital, or maybe this area, right, you should not be doing any alert, because your benchmark is here, your adjustment stands here, your adjustment stands here. When the market stands here, or when the market stands went down like above your break even, below your break even, do not do any adjustments until and unless you are able to trap the market in this green area. You are good, you will get profit. What did we discuss? It's all about delta. See, any credit strategy is all about delta, because delta is the friend of buyer. As a option seller, we have to ensure that the delta is balanced. For buyer, you need like more delta moment, because he has to capture the momentum of the market. But for the seller, it's the opposite. So we have to keep balancing the delta between your put position and between your sold position. The delta should be always balanced. If it stands here, so there is imbalance. This delta is less, right? This delta is more. because this is your testing side, this is your towards your ATM, right? This delta, so you have to always balance. How do we balance? You exit this and get your put here, so that again your delta is balanced. This is your balance, you have equal distance. And if at all someone is like very conservative trader, they can just for the this is intraday, if they wanted to hold this trade for the next day based on the because let's say the straddle stands in the correct in the center, right? So if you want to hold this trade, you have to just add a edge at 325 either on the put side or else on the call side. That's it, and then you can hold, and the next day morning at 9:20 you have to exit the edge by accepting a loss of 300 or 4, because end of the day saving the capital is important. That's what I said, edge. Even I've discussed this in the yesterday's video. And now people will start asking, like, if I do 3 adjustments I'll be able to pay the brokerage. See, that's what I'm telling. Option selling is all about huge money, big capital. If you're doing it 1 lakh, I think that doesn't make any sense, friend, because end of the day we are targeting for 1%. If you're okay for 1% per week, that is 1000 on a 1 lakh capital, right? Then do the option selling. If not, seriously I'm telling, there are like many YouTubers will say that even with 50k you can do the option selling. That's completely wrong. Rather than doing the naked strategies, go for debit spreads, go for like risk defined strategies, wherein at least you'll get like more profit, and also the loss will also be more, but you have to know the active adjustments. So go for debit spread, you go for debit spread, or you go for ratio spreads, but no option selling when you have a capital of 1 lakh, because whatever profit you are getting, you will be spending it for brokerage. But if someone is trading with 10 lakhs or 1 CR, for them this 400 rupees brokerage is nothing. But if someone is trying to get 1% profit, that is 1000, and within this 1000 if you are spending 300 to 400 on the brokerage, so what you are getting from the market, right? People doesn't understand. I'm not trying to demotivate. Even when I used to see the videos, I used to think the same thing. This guy is doing option selling, is demotivating all the option sellers, whoever has the less capitalists. They had a very valid point, because 1000 profit and you're spending your STT brokerage charges for like 300 200, then you're getting 700, right? Rather than that, go for debit splits. Rather than that, go for swing trading. Rather than that, go for you go for mutual funds, go for Nifty Bs, right? Peace of mind trades, right? Yeah, brokerage will not make a big difference for people who have like huge money, because end of the day people who have like 1 lakh capital, they end up paying the same brokerage, let's say 300. People who have like 1 CR will also pay the 300 rupees. That's it. Sorry, 300, not 3000. 300 rupees. That's it. There is no difference between 1 lakh and 1 CR. But for 1 CR people, 300 is like peanuts. But for 1 lakh people, this 300 makes sense, right? Because 300 is a huge, right? Don't even do the intraday when you have the capital, or else look out for broker terminals. Look out for broker terminals who are giving you free brokerage. At least that would work. Right, check the safety also. And positional, friends, if you want to convert it to positional, right, what did I say? You can just convert it to positional at the end of the day at 325. Alright, friends, so I think, see again there are some few requests saying that do the simulation. See, I can do the simulation. Why not you can give it a simulation, friend? I've shown you all the example, right? Try to do a simulation on the Opstra. Do not deploy the real trades, right? Tomorrow morning, go ahead and just deploy one trade. Okay, tomorrow morning, go and deploy a trade at 9:20. Let's say 9:20 or 9:30, right? Let's say you deploy a trade tomorrow in Opstra. Simulation. That's it. Who is asking you, right? Not to try at 9:30, and you do by yourself. Do not expect others to do the back testing. I mean, I get so many requests. I can do the back testing, but it is time consuming process. You will not understand. You will watch it as a movie. Go and deploy the your straddle. Okay, let me zoom this out. So when did we deploy the straddle? See, this is give a move. No, right? This is what I'm talking about. This is what, right? If the market stands in this area, you will get into profit, right? This I'm doing it one lot. This I'm doing it one lot. But if I just increase the lots, let's say I'll increase the lot. This is pure. This is the beauty of option selling. People will do it with 20 lots. Now this 3,000 rupees per. When did we deploy it? Like it's been like last 15 minutes. I got 3,319. Exit the trade, friend. Right? Definitely, you need more capital. Right? Definitely, you need more capital. But check check the returns you are getting. Already you're getting 0.1%. I'm just giving you an hypothetical example, do not, but for me, if I have like huge capital, 3000 is all makes a big difference for me. I'll exit this trade, right? I will not exit. Basically I'm telling that if until unless I wait for the market to see, I have my benchmark, right? What did I say? You have to just go ahead and mark your this thing, put the alerts. You do not do any adjustment. Let's say it takes like another 3 hours to come the market, so then this will become 6000, 7000, right? And if you're targeting 1% per day, quit my video, friend. If you're doing intraday, though it says 11%, this is for the expiry, not for the current T+0. T+0 should be maybe 0.5% or 0.3% move, 0.2%. That's it. Exit the trade. If you get 0.5%, I think you have to exit the trade with the profit. Right? This is all about the straddle management number 2. Okay. I'm not sure whether you liked it or not, but my purpose of doing this video is like you can do the intraday. This is pure rule based. What is the rule based? Nothing, friend. Your entry should be perfect. Your consolidated premium divided by 3 or 4 or 5, you decide that. You have to put your stop loss into the trading terminal before you deploy the trade, and this is pure rule based. As and when the market makes a move of your benchmark in the meaning like whatever points you have decided, then convert the exit the straddle and convert it to new straddle. By doing this, you are managing the delta. Basically it's all about managing the delta. The moment you manage the delta, the current price will be in the middle of your straddle, right? It is like safe on the upside and downside, and if it makes another 170 points, you have to just exit and convert. I'll tell you one more thing, friend. See, maybe let's say you have deployed a straddle. My goodness, right? Let's say you deployed a straddle, first straddle. Market came here, you are in a loss of 2. Let's say you are in loss of 200, right? You might have deployed a new straddle, right? You have deployed a new straddle here, right? Market is here. Second time also, let's say you are in 100 rupees loss. This is minus 200, this minus, right? Do you think market will go up, right? Again, it has to retrace, right? It has to consolidate. Third time also, maybe the market came here, you might have deployed one more straddle. That's it. That's the last. Market is standing in now. If it retains here itself, right, it consolidates. So you have this new straddle. Let's say it consolidates here itself for another 1 or 2 hours. Don't you think you will be able to mitigate this entire 300 loss? Let's say you get 600 rupees profit. Let's say, right, with the third move, you'll be able to mitigate your loss and also you'll get into the 300. So that's what I'm telling. Just give it a try for 3 to 4 weeks. Do not come to a conclusion just by doing one day. I've done this straddle, I won loss, so this is nonsense strategy. Yes, for you that is nonsense strategy because you are treating it as a gambler. Do it consistently for 1 day, 2 days, 3 days, 1 week, 2 weeks, 3 weeks. If you do that, you'll get to know. So I've discussed about this strategy, right? So I have another like 3 to 4 strategies, friends. So it all depends on the comments. I mean, the moment I made this video, I'll show you. Right, I was so happy to get this type of comments I need. Okay, let me show you, friend, how to do. Okay, yeah, videos, right? Yesterday I made a video, right? I was so happy to see comments from, I have so many comments, right? Explain about this straddle, we are interested to see the simulation, right? Very good explanation. There someone said do the simulation, right? Best please show some back testing, right? See, back testing, I want you guys to do that, right? Need simulation, I can do that simulation. Just give it a try. If you're able to do that, right, just share with all the other viewers also. So now what I'll just conclude the video. I think this is becoming lengthy. So basically, right, this is what I wanted to convey with this video. So I have another, what do we say, another like 2 to 3 other intraday straddle adjustments. If you are interested, I'll let you know, and even that would be like eye-opener videos for you. And then we will go to the strangle adjustments, purely intraday strangle management. All right, thank you, friends. Thank you for watching my video. Please give it a like, friend, right, and also try to share with your friends. Okay, thank you.